And that means we are live here on our YouTube channel 4/20/2020. I guess there's some alliteration in there somewhere with the numbers, but welcome out to our halftime report here presented by tackledtrading.com, a daily stock market trading investing show where we go through all the news of the day, all the charts that are grabbing our attention, and anything that we think that you need to know about. We got Tim, we got Mark, and we've got Cody here. Mark, how you doing today, brother?
You love alliteration so much, you should just turn your name to Timmy Jimmy.
Well, there's a lot of Timmy alliterations, I believe. Tiny Tim, right, is the famous one, you know, from the books and the fiction. But yeah, I do like alliterations. They just kind of roll off the tongue. There's no question about it.
Timmy Jimmy is trying to get slimmy because the coronavirus kills people with. It's the thing about the coronavirus, right? Though, I mean, we've seen the reports on the coronavirus that obesity is one of the leading causes of hospitalization. Is that going to cause you to alter your eating habits, Tim?
It's not the eating habits need to change. I need to be more active. You know, stuck in this house all the time. I'm having a hard time getting out of this office enough to actually get out and get some exercise.
Person that is going to gain 15 pounds this year. I don't need to eat better. I just need to do more stuff.
Well, I actually eat pretty healthy lately, you know, especially I don't eat out at all. I mean, we're cooking everything from home. We do a lot of vegetables, mostly proteins, you know, and whatnot. So the issue is probably a lack of activity, which I need to get on an exercise routine, Mark, that actually works from home, you know. And that's one thing that I'm trying to find something to fit in there. Cody, how are you staying active during all this?
Downloaded an app that you work out using body weight.
Mm-hmm. And Marky, what about you? Are you changing your eating habits? Are you finding ways to work out from home?
Every time you ask me how I'm doing, I'm just going to make fun of you for being fat.
I said, what about you?
And then that will make me like burn lots of calories out of excitement every day. So that's my current plan.
Are you exercising?
I am actually.
Good. Like a little home workout or something like that?
I mean, we have extra time, right?
Mm-hmm.
How are you making the most of it, right? You know, go you know, just simple walks. Mm-hmm. As I turn on my video after eating cheese-covered tater tots.
Breakfast of champions. Let's break down the markets here. Actually, stock market is not the lead headline for today, but we'll come back to it here in just a minute. Give me crude oil if you can. If you read any news this morning, you probably read about crude oil's historic drop on the front month contract. Now, the problem is that's not on all contracts. And you'll notice here, Cody, when you bring up CL, this is West Texas Oil for the month of June. It's still trading at $22.72. Now, obviously, we had the expiration last week. Friday was open, was a repricing for the June contract. But if you go to the trade tab here and take a peek at the May contract, which expires, I believe, tomorrow, Mark, is that right? If you look, and instead of active only on the left right there, give me all of them. The May contract, I believe, is trading at $7.86. Mark, it's fascinating. Whether it impacts people's trades right now or not, that's a different question. They may not be in that contract trading futures at all. What is happening here with this contango? Because this is historic.
Well, I mean, the general belief, and this is held by widely amongst a lot of participants, is that demand is down right now. Society will reopen. And when society reopens, there will be more demand for oil. There will be more economic activity. We'll start an economic recovery. But right now, nobody's flying. Industrial production is down. People aren't driving. And yet we still have enormous, massive amounts of supply, creating this situation where futures prices are elevated in the future. And in the short term, well, you know, if you got room to take delivery of oil, it's pretty cheap today.
Yeah, $7.86. Now, I don't know how low it's going to trade because who in the heck actually wants this oil? Part of the problem here, Mark, is the capacity issue. They have nowhere to take it. I mean, you take delivery on the front month crude, where are you going to store it? Where are you going to put it? So many different firms, they're already producing too much oil as it is. Just a historic collapse here on the front month. Now, as you look at that, you see the 22 for June, then you see the 27 for July, August. I mean, they're forward pricing, obviously, that oil is going to rebound. Does that build any contango risk in for like the next 30 days, 60 days? I mean, how does this play out, do you think?
Well, I mean, you got to just navigate the oil markets. Like, listen, I'm as excited as a pig getting a new bucket of slop right now when it comes to oil. You got to just be a little careful on how you navigate it. Don't push all your chips. We've been talking about this with pro members for weeks now. Don't push all of your chips in the middle. Dibble, dabble, nibble a little bit on naked puts at lower level, kind of reduce a little bit of that contango risk, lower that cost basis. But eventually, this has been the working thesis I've had for 6 weeks, 7 weeks, those markets will rebalance. You have potential wild card in Trump slapping tariffs on Saudi Arabian oil, which there are reports that there's more Saudi Arabia oil coming in right now. Let me see if I get this right. Than like a long time. So that would help reduce some of the supply issue. You have oil rigs shutting down in just this rapid pace. Congress might pay oil companies to just sit there and not produce. I mean, after all, they're paying everyone else, right? There's a lot of ways this is going to work out really well. But the storage issue, first and foremost, which is why you aptly said, why is it falling to $7 today? I mean, that's crazy, right? We're talking about oil futures at $7, $8 right now. You know,
It's crazy.
Why aren't people just saying, oh, well, I can make money by storing this and selling it in July, August, September? Because those storage tanks are already full. I mean, they're running out of places to put it, which the demand for oil, even in oil traders, big oil traders that would store it for later, they're already full. And so the storage issue is going to force this issue. Oil companies, well, I don't know what level they can make money at. It ain't $7. And so the storage issue is going to force the issue, force supply to be drastically cut, They don't have any choice in the matter. And this creates a great investing opportunity if you play it right. Be a little cautious right now. We talk about this with pro members. I'm excited about it.
Yeah. You know, these prices down here where we're at around this 2025 mark, obviously price in the short term can do a lot of different things. And the USO contract is not based on the May contract, obviously. They rolled that into new futures contracts over time, I believe, Mark. I don't really know how this works. Does that pose any contango risk, though? I mean, are you dealing with a little bit?
A little bit. But once again, this is why we don't push all of our chips in. Like, there's a good, listen, when I get a naked put actually put to me in oil, it will be the first time in a long time because the dang things just keep expiring worthless. And so like, but I'm willing to take ownership at $3 on naked puts. That's the first leg of a cost averaging plan I have, but I'm not going to shove all my chips. That's really key to me in how you play oil right now.
Give me the trade tab again there, Cody, because I think naked puts are a really interesting concept. And by the way, welcome out there if you're watching our show here today. As always, great to have you come in and join us here in our halftime report live. And give me a thumbs up whenever you pop in the show. If you're new to our channel, subscribe, click the bell, come back and join us every day as we do this. Give me the 4-day contract actually there, Cody, you know. So the $3 for 4 days, Mark, you can pick up $5. You know, you got to pay it $4 or $5. Okay. So that's not a lot of credit there, obviously. As you go further out in time, that now let's kind of flip through a few of these here, Cody. Let's look at the 11, $10. Okay. Shorter term, higher theta, 18. You're dealing with $16, you know, 25, you're getting into $20. If you go all the way out to June, like 60, now you're going to get like $30. How do you decide which expiration you're interested in mostly, Mark? I mean, because the shorter ones, they have higher theta, they can expire quickly. Where's the balance for you?
As a general rule, and this played out about 3 weeks ago, right? 4 weeks ago when equity started rebounding, and people were asking me that same question because I was talking about, hey, let's do a naked put on Delta, let's do a naked put on MGM, let's do a naked put on a couple other things as the markets were crashing. And they're like, well, what month do you take? And I was like, I'm erring on the side of that 28, 35 days whenever possible, because what have we seen in this market? At those longer credit, you get a bigger credit, and there's so often the market will rebound on whatever. Like we saw that in equities, we've seen that in little spikes in oil, and it will just clear out those contracts where all of a sudden they were at 20 and then now they're at 3 cents, and you can close them out of a profitable trade and wait for the next dip to do it again. So I'm going for the bigger credit as not just a general rule. That's all I've been doing, and just playing it that way. So 28, 35 days, That's generally what I've been doing.
Somewhere in there in the sweet spot. You know, we have found that like 4 to 6 weeks is always a good target window for selling credit. So that does make sense as well. Let's move back to the market here for just a minute. Obviously, the markets have had a lot of back and forth. On Friday after the halftime report, we had a late day rally, which was really interesting to watch. It kind of just spiked on the last few minutes. But if you think about it, I mean, the last, what are we talking about? Last couple of days. I mean, we've been in this range up here at the top. We've got it on a 15-minute chart right here, and you're seeing it back and forth consolidating. The market opened up down this morning, Mark, but at the cash open, you have buyers coming back in and driving it back up to at least an intraday high here. What's your read on Monday morning prices as you're watching these markets kind of shake themselves loose?
Listen, we've been saying it for weeks now. The bulls are in control of short-term price action. Dips are bought aggressively. They've been in control. It shouldn't be surprising, especially after you form a nice hour-and-a-half support level. I mean, there was an hour and a half before the market opened where, hey, bears had plenty of chances. And when those support levels form intraday, well, if that support doesn't break, let's do the math. What direction does it have left to go? Up. And that can create some short-term momentum. Bulls have been in win anyways. And so you see day traders, you see people like, let's come in, let's do this. We've been winning for weeks. And well, they've been winning for weeks.
Well, and the area they're probably winning the most in has been like tech firms and whatnot. There have been some leadership there. Give me the NASDAQ real quick here, Cody, if you can. You'll notice NASDAQ is got just a better trend to it. In fact, we're above the 200 period moving average on that intraday. We're also approaching 9,000 on the daily and the weekly chart. Mark, this has been an area of strength in this recovery for bulls as they're buying up firms like Amazon and Tesla and all these other types. Do you think this tech leadership is going to stay intact as long as the bulls are in charge?
Dude, let us be honest here. It's not tech leadership. It's a couple big names leading the charge. That's all it is. And so you have faith in those few big names to continue to lead the charge. That's the question. But to say that it's a broad tech, no, not on this level. It's big names leading the charge. You have faith in those big names leading the charge. You know, I mean, Amazon and Netflix are both on. I created a watch list for pro members. They're both on my preferred deeper pullback list. So, I mean, they're market leaders right now. Like, so, I mean, there is some semblance of logic to price action to the NASDAQ is going to do better than the S&P 500, all things being equal. But those are still some wickedly high PE ratios, wickedly high forward valuations, you know, like, and I'm sure we're going to get into that right now. So I'll save my sarcastic comments for 1 p.m. Eastern to really break into full sarcasm at current bulls buying today.
Yeah. Well, don't you think this is just people chasing names they know? You know, they're buying Amazon, they're buying Netflix, they're buying obvious things in the face of, without any consideration of the cost, by the way. You know, fundamentals and PE ratio have nothing to do with this. In fact, back on the S&P for a minute here, Cody, I read a report, and give me a weekly chart if you can, Cody. Let's talk fundamentals for a minute, Mark, because people are always asking what's a fair price, and price is what people are willing to pay, obviously. The bulls can keep running this in the face of high valuations. The S&P at 2856 is not cheap. It's just not cheap. Just because we're lower than 3,400 doesn't make you cheap. I read a report today based on quarterly earnings and the expectation for 2020. We're probably looking at a forward 12-month PE ratio around 26 right now on the S&P, Mark. Now, for some context, most years it trades at 16. Okay. And I'm not talking current PE ratio. We're talking forward 12-month earnings PE ratio. So you're paying 35% more in the fundamental cost of stocks right now than you would have paid at any point in the last 10 or 12 years. So if that actually came back down to 16, that puts the S&P at 1900. Okay. So what's going on with earnings? How long can Wall Street shrug this off? How long can we avoid this
is the big debate. If you're watching us for the first time, or if you're long time, this is the debate in the market right now. If you're saying, I got to put my money to work, cash is trash, I can't miss, this is the debate. And it is not even a hidden debate. The bullish debate, and I subscribe to this, I just don't subscribe to it at these price levels. But the bullish debate is there will be unlimited federal intervention in the markets, the Fed, governments themselves, unlimited. I mean, I don't think we've talked about the new legislative bill on small businesses yet, but we will here in a second. This is infinitely coming. You need money, society, here's some more money. You need some more, here's some more. You need some more, here's some more. That's never ending. Coupled with the fact that one day medical science will get a hold on the therapeutic treatments, vaccines, and one day things will be good. And the uber bullish debate is, right, I agree with you, Mark. So let's buy today. Like, valuation does not matter. Economic doesn't matter. And I'm not saying it's not going to matter for the entirety of the next 12, 18 months, but it doesn't matter to them today. That's why you've seen jobless claims numbers create bullish rallies. That's why you're going to see some terrible earnings coming up, and it's not going to matter to the market as a whole, because it's not about today for the uber bull. It's about one day in the future. And so, hey, if it can't go down very low, if the new bottoms are in, maybe it goes down a little bit, but it could also go up a little bit. So let's just go in and let's do nothing. And that's the bullish debate. And so your fundamental, your forward PE ratio, they don't care about that, Tim, because one day things will be good again. And the only thing that I have been saying for 6-7 weeks as a moderate bull is I agree with you. But what
I'm not hearing any institutional money make this argument anymore. They made the argument 2 weeks ago when the S&P was at 2,400. They're not making it today at 2,850. Goldman Sachs price target for the end of the year, when they came out and said we're bullish, cautiously bullish is what they were saying. They were looking at 2,900 by the end of the year. Give me Berkshire Hathaway if you can hear Cody. Charlie Munger even had some very, very interesting things to say about the markets right now, Mark, and I believe you read into that. An investor like Munger and Buffett and these types on Wall Street, what did Munger have to say in the article you read?
Munger basically said, oh, what was it cute? Let me paraphrase. It was, when everything's going to hell, I'm not going to pretend to know what is going to happen. And for our investors, we are primarily focused on liquidity, because this is not like other situations. Because if you remember, right, Buffett back in 08, 09, he famously did the buy America. As the stock market was falling, he's like, I'm putting my bet on America. I'm putting my bet on America. Well, fast forward 12 years, you know, Charlie Munger is saying, yeah, not so much this time. This is a very complicated situation that we're navigating. It is really difficult to see the future. And so we are going to put liquidity and our stakeholders and be cautious, essentially. And he used some colorful language to describe that. But he basically punted. He said, no mas. We're going to wait this one out.
Yeah, because you know when Warren Buffett came in and said, I'm going to bet on America, when the S&P was at 700. Okay. When the S&P had already taken that second leg down, you did not hear Buffett on CNBC and pounding the table and these type of investors when the S&P was at 1250, right? Because that first wave in 08, when it came down, market didn't bring it all the way back down through a crash. I'm sure Buffett and Munger, if the S&P is at 1500 or 1700 or 1900, are going to have a much different approach to what to use with their cash.
And that's value investing 101, right?
Right.
You take X company or X market or whatever it is, and well, there is a price where that becomes attractive, and there's a price that becomes unattractive. And basically, Charlie Munger said the market as a whole right now, very unattractive. But hey, they've only made $100 bazillion dollars, so I'm sure you know better because you've been chasing green candlesticks out there, and you're worried that the S&P might go to 31, 32. So why don't you go shove your money in? You know, smart money. We've seen hedge fund flow out. You know, Berkshire was very unequivocal about what they're doing. Where is the upside from here? That's the question I would ask someone that is an uber bull. Where's the upside versus the downside? For me, the stock market's always been like poker. It's always been about football betting. Is it a good bet or isn't it? Like, I don't know the future any more than Charlie Munger. There's a lot of things about this virus and how it can play out. We've never been through this before.
Mhm. Give me
But is it a good bet to buy today?
the whole market. I don't think you can make the case. In fact, I mean, it specifically, couldn't you easily make a better case in specific industries, on specific companies, stay-at-home type companies, all that kind of thing? And one area, Mark, I don't have an opinion on it yet. I'm trying to wrap my head around it. Give me KRE if you can, or XLF. Either one works, Cody. KRE is the regional banks. XLF is the financial sector. XLF here, obviously weekly candlesticks. Go back to a daily if you can. There's a little bit more clear air there, Mark, in based on where the market is, based on where XLF is. Now, I read this whole payroll protection program through the CARES Act. It ran out of that small business funding in about 10 days, something like that. $350 billion processed. And Cody, you correct me if I'm wrong. Sounds like they're going to pass another bit of legislation soon to put more money on the table. It feels like it's moving that way. Is that right?
100 billion.
Yeah, 300 billion, right?
Yep. So they went through that first 350 in 10 days, and now they're going to add another 300 and see if that works. But we'll see. I think it'll go out just as quickly as the first one did.
Yeah. And I read some interesting stats on this, Mark. On the first round of funding, the 350 billion, banks actually made about 7 billion in processing fees alone. And these are guaranteed loans. Is banking an area that you're targeting, and how are you thinking about this one? Because earnings were terrible last week, but there's some interesting caveats here.
No, there are. And this is why I was slightly excited about banks heading into earnings, because they are making, and this 7 billion, this is risk free. I mean, these loans, these are basically banks are handing out this money, and they are basically collecting these huge processing fees. They're acting like credit card companies, like a Visa that's not taking any of the risk. They're passing the risk on to someone else, and they're just collecting processing fees. Well, we know the Visa model, the MasterCard model, makes a ton of money. At the same time, banks are cutting off credits to try to reduce the risk moving forward. Their trading desks are doing all right. So if they keep handing out free money, collecting these huge, massive processing fees, there's something excited about dabbling in banks. The big thing that scared people about the earnings report is like, holy cow, the banks are preparing for tens of billions of dollars of loan defaults.
Yeah, and that's the problem.
And that's the bearish thing that gets you a little hesitant. Because if this recession goes on a long way, hey, America was stretched pretty thin on both a business and an individual level. We were partying like it's 1999 coming into COVID-19. And that's going to create, that's a situation where people are, well, I don't know if irrational is the right word, but spending a lot of money without very few cares about the future. Well, that leads to this huge tsunami of credit defaults in both business and on an individual level. And banks basically said that's coming. And we're setting aside money for defaults, writing that down, setting aside, I think it was $20 billion collectively. And so if they tighten up credit, so if I'm going to invest in a bank, this is what I'd have to believe in, that moving forward, they're going to tighten credit to reduce the chance of future defaults. They're going to make a ton of money processing stuff from the government. That is happening. That's not a speculation, and that's probably going to continue to happen on some level. And then their trading desks are going to be a little good. And then on top of that, I have to believe that if the banks get into trouble, that the government will come in and help them out. And I generally believe all of those things. And so I'm scared about the consumer defaults coming down the road.
Yeah, and the commercial defaults.
And the commercial defaults coming down the road. But there's a reasonably bullish case to be made as banks as a whole. It's just, what price are you willing to play that level? I mean, banks have been a hard one for me the last.
Or do you try to pick some individual players that you think are going to better benefit from access to government programs, the too big to fail arguments? I mean, could you make a better case for like a JP Morgan than you could XLF?
The argument's all on big banks. No, your small regional banks, screw them. I want zero to do with them, because once again, we've seen this, right? We know how Washington works. The bigger you are, the more access to credit, the more access you have to free government money. We've seen this on the most recent small business program. A lot of small businesses got left out, but Harvard, Shake Shack, somehow they were able to tap into those goodies.
Well, give me Shake Shack, if you will, based on this program. I thought it was really interesting. And the company applied for funding on this deal, Mark. They got about, I think, $10 million, but they put out on Twitter over the weekend, they're going to give it back. And a lot of people applauded that and said, great job. The problem is, I think SHAK is Shake Shack. I think the reason why they're giving it back is they started getting shamed over it, Mark. There was a public backlash saying, you're not a small company. You are a huge brand, a national brand that has stores all over the country. You have all of these employees. You have all of this annual revenue. Why are you tapping into a program that was designed for small businesses? It's a really interesting social dynamic that's happening between big business and small business.
Let's not applaud someone that steals a TV out of your living room and then brings it back and you tell them, good job.
Well, I don't know, Mark. That smokehouse burger they have is pretty delicious. I might be willing to look the other way.
I like Shake Shack. It will not affect my.
I was in Kentucky once when I was driving around in my poker years, and I ate something from them, and I was sick, throwing up with food poisoning in my hotel room for 2 days. So Shake Shack, you were never on my bowl list, ever.
Are you sure it was Shake Shack? I'm thinking Kentucky in the 1990s. I don't know if there was a Shake Shack there. I think you are throwing these guys under the bus without evidence, is what I'm saying.
I'm 50 years old. My memory fades, but in my
what
head,
it probably was, and he won't admit it was probably the McRib.
No, it was never the McRib. It was never the McRib.
Oh, dabbling in McRibs. I don't know. It's really interesting. I hope this new round of funding, though, Cody, actually does get to small businesses, because I don't think that they had as much access to the capital, small mom and pop shops, restaurants, things like that. And I know a lot of people are waiting in line for more of this money. So it's going to be really interesting to see if that gets passed. But that goes into the bull argument, Mark. Endless funding, more rounds of it. It's not just a one-time deal, the CARES Act. They're going to continue to push money out there as needed. Government's ready to play ball here for the long term, don't you think?
I mean, listen, I just got joined by Noah the Bear to join Timmy the Bear. Fighting the Fed is a hard fight as a bear, isn't it?
Well, it can be expensive. I'll tell you that much. It can be an expensive experiment.
No. Yes, it can. You can lose. I mean, the markets can stay irrational longer than you can stay solvent. No, that's what I'm saying, right? Yeah.
Yeah. No, and I mean, it's honestly making me rethink. And one of the things I've been doing lately is I've been trying to rethink my perspective on modern monetary theory.
Oh, absolutely.
I'm a hardcore, you belong to the school of Austrian economics, believe you can't just print money without consequence. But I've decided that since it's happening anyway, to look at it the other way and see, what are the benefits? What are the merits? Have we seen a rise in, the cost of goods and services with all the money creation that we've seen? And there's not a lot of evidence that, direct money printing is contributing directly to inflation.
Listen, come on board, you guys. There's plenty of room.
Not a chance on the planet.
On the MMT bus.
No.
Listen,
hey, join me.
First of all, let me clarify one thing.
Sound like a bunch of drug dealers trying to convince kids.
I have been arguing MMT is a viable modern theory for years, and
I feel dirty trying to think about it.
Yeah, but I've belonged to this, Austrian
including you,
school.
Mark.
So
MMT was a theory that I got behind early.
Okay, I gotta call bullshit on you right now. All right, because I know what you said is true.
Yep.
That you think it is a viable theory. If that is correct, then you should be more aggressive in your equity take.
No.
How can you
even if because I do believe we're going to come out of this, and I do believe we're going to have an economy in the future and a life in society, and I'm not an end of days chicken little guy. The problem is I don't think that that justifies a 30 forward PE ratio on bankrupting companies in the face of 20% unemployment.
Every word you just said that came before, the problem is bullshit. And you don't believe it.
I believe MMT
after is what you really believe.
No, it's a survive, not thrive argument, isn't it? MMT can help the markets not crash to where we don't go into a depression, but that doesn't mean the market needs to go to 4,000 on the S&P.
And I agree with that.
Okay, and it doesn't mean that that you can justify a forward P ratio of 26 and a chart that makes no sense.
So basically, you're right now making my bullish argument that I've been making for three weeks that you've been fighting me on. Because
No,
at some price level, you're interested, right?
it's all semantics. I mean, the idea that I would be bullish at 2000 with new economic data is definitely at play. I would be, but because I'm not we're going to crash forever guy, Mark. I may wait and see. Let's see how the economics come out. It's going to be a long time before I start thinking about investing.
So you like to
in
place
movie
your bet
stocks.
on a football game after you see the final score.
I need a lower leg, Mark. There's no chance I'm buying up here. There's just no chance. So the idea of a naked put at 2000, calling that bullish, we have a different semantic view of that term. I don't feel that's a bullish thesis. I feel like that is an investor thesis based on value. That's value investing. That's not, I think the markets are going to go up, because when I hear the word bullish, you got to make money from upward price appreciation, not downward price appreciation.
Well, that's from
not
a trading
volatility
point of view.
falling, right? Yeah. Here's the bottom line. I'm not buying into this rally, and I haven't been, and I won't be.
Your position as biggest bear at tackle trading still stands, because
I still think that we're going to see a down leg, but I don't know that fighting the Fed you can't really do it in the long run. So it means you have to turn your thesis bullish probably quicker than you would think.
And this is hard because, like, it is so hard to look at unemployment numbers and not be like, oh my gosh, how can that just be devastating, right? Like, it's so hard to look at economic data and be like, but man, fighting the Fed is just a really hard proposition.
I have not read a single analyst coverage report, hedge fund investor survey, shareholder, document that's been sent out there by the big billionaires and hedge funds on Wall Street, Charlie Munger commentary. I have not read anything in weeks that says the market is a buy right here. Even those
Nobody
guys
here believes. Okay,
not anything, not a single thing.
On a scale of 1 to 10, how big of a buy do you think the market is right now? Tim?
1.
Noah?
1.5.
Cody?
I'm not buying. I'll still make it puts.
Dude, once again, you ignored the parameters of
I did. I absolutely did.
Don't we get to control the parameters just like trading? Like you can't control the outcome.
dude,
I'll give it a 3. I mean, if it
I'm a 2 at best, right? All right, so we all think that if you buy right here, like, that's kind of insane right now, because where's your upside compared to your downside? Fed monetary theory, as Tim said, does not mean things thrive. It doesn't make people go to Disneyland. It doesn't make people buy iPhones. It just provides this base of cheap money in which economic activity can go. And the COVID-19 is kind of a different situation, right?
Mm-hmm.
Where you can't force production because people aren't producing. So, but it's not a great buy right now. But that doesn't mean at a lower level, how do you not at some point get excited, or at the very least be like, all right, I'm done with my bearish days. I'm not going to try to short it all the way down to 1500. Like, I mean, there's some level you got to come in and buy, right?
Yeah. But can't you wait for that? I mean, can't you wait for at least a new pivot or the downward pressure to see how the markets handle it, or, a big red candle to the downside and just see if the intraday players come in and stabilize it. If we can hit the 20-day moving average and find ourselves. I mean, even if the premise is bullish at some point, I'm willing to buy at some point. What is the harm in waiting for that price action to develop?
Listen, you keep doing that, I'll keep having naked puts expire.
Also, Tim, couldn't we also, betting on the whole market versus betting on specific stocks, like capturing Netflix as it breaks out, or some of the stocks we put on the scouting report this week, for example, like NET, pop that one open. This is Cloudflare, and threw it on the scouting report, and it's popped up and showing some. It's easier to pick, I think, individual stocks with upside potential that can benefit in the current environment.
Yes, absolutely. 100%.
Like Slack Workspace has got a beautiful setup at the moment. There's a bunch of ideas out there that I think it's easier for me to take a bullish bias on individual stocks than it is on the whole market.
Oh, I think trading is back. I mean, like go to pull up Johnson & Johnson, Procter & Gamble, Abbott, 3 companies where earnings came in, all look like that no matter what the situation with COVID moving forward, that these companies are positioned to do well. And so if I get a nice trades, I mean, if I get trade setups, if I get opportunities, isn't it funny how that stopped at 100 on the penny?
Ding.
Oh, that's ding, 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 ding. Ring the bell. Yeah.
Ding.
Like 100, oh, computer sell, you know, but
That's
like,
funny.
let's say you got a little sideways movement, a little high base on Abbott there at 100, you know, take 2, 3, 4, 5 days, get a nice setup. Because you always hate, no matter how good the company is, chasing momentum after it's gone for 2 weeks like that. Chasing the dragon is what Noah calls it. But like when you get good trade, or let's say the market sells off for 3 days and you get a nice pullback on an Abbott or a Johnson Johnson, there are, as building on Noah's point, moving forward, as we get a picture of companies that can do really well no matter what's coming with COVID, there can be some real quality candidates. And so, you know, I talked about that over this weekend. Noah talked about trading's back, and building a watch list of these quality companies. I mean, go to Shopify. Like, I mean, there is a watch list developing of companies that are like, yeah, let's party when we get those technical setups, because not everything is going to be massive, huge momentum days, but there's really some trading opportunities out there in this developing market. I think it's going to be a fabulous trading environment for the rest of the year. I really do that. You're not going to have as many candidates as you might normally have, but when the setups occur, I think there's a lot of potential there.
Yeah, I'm with you. And there's areas in the market I can wrap my head around a lot sooner than even say equities market. I mean, gold we were talking about earlier as well. You know, so individual companies, yes, no, I think it's a really great point. There's a lot of great technical setups across the market, but even just from a fundamental perspective, the argument around gold makes a lot more sense to me than the argument around equities based on all this monetary theory and all this kind of stuff. You want to say don't fight the Fed? I mean, it doesn't.
Well, don't fight the Fed, but also buy gold. Like that should be the caveat to that. Like, don't fight the Fed, but buy some gold, and that's okay.
Yeah, because I mean that's a beautiful pullback. Obviously, I mean it's not a trigger or confirmation, and I don't really trade gold, but I just invest in gold. But gold, I am more resounding, bullish on than I've been in a very long time, and I've been a bull for years. You know,
I've been using this saying for the last 2 weeks. Tell me what you guys think of it. If you believe in it, if it makes sense. I've been saying there's very few things in this marketplace that I trust more than naked puts on gold at lower levels.
Yeah, I'm with you. Because if you have to buy gold on any dip, you know, let's say like GLD, give me GLD, Cody, if you can, the ETF. Cody, I think you even came in and did naked put on this just this morning, right?
That I did.
Yeah. You know, where that level is, I don't know. I mean, I would be comfortable buying the equity here, by the way, but a naked put on a discount is always a good tactic for the market. Noah, how are you approaching gold? Are you trading the futures, trading GLD?
Well, if you were to go read the stock report this week, one, I'm just bullish on gold itself. I'm always a proponent of buying the physical. I have been playing the GLD, but there's everything I read on the gold market right now is telling me that they're having a shortage of physical, like the mints are on back order or they don't have inventory available. You know, dealers are scrambling. Like when I talked to one of our good friends over at Zaner Group, I talked to Lee Schneider and he was telling me that it's tentative at best if you want to get your hands on actual physical gold and silver. And then there's a contango between the spot price and the futures price, which again tells me that there's a lot of demand. And so I think my general thesis was not only can you play the gold, I think the gold mining stocks have a big upside potential. So on the scouting report, I put together a list of some of I think the most viable gold mining stocks and the gold mining index, like the GDX. And just, it's got some potential there that will benefit from the demand in gold. So there's some potential there. And again, this is the miners, not actual gold itself, but the mining companies. And I think there's a need for new gold that's going to probably last for a little while now.
Yeah, I think as long as they actually do have the physical assets in the ground and they're not like a credit risk or something like that. I like the idea of the large cap gold miners over small cap gold miners here. And there's several that I would be interested in there as well. Mark, when do the miners come back for you? Because I know you've been a stay away from these for a bit, but Noah is right there, you know, talking about miners. They're about to break out here on GDX. When are you interested in gold miners, Mark?
Well, I don't know which one of you is the biggest bear, but in tackle trading, I'm the biggest COVID-19 over analyzer, perhaps. And I just, the rolling risk of shutdowns, I mean, because we've seen this in food processing plants, right? Like where Hormel shuts down, where, you know, different, oh, what's the meat? I can't even think of pork processing plants. And so I just worry about rolling things. I mean, it's not the biggest thing in the world to worry about. It's not going to materially impact them in a while, but I take COVID-19 risk into all of the things that I do right now.
Yeah.
That's what my stop loss is for.
Take a look at Newmont Mining, though, real quick. I mean, look at the momentum in some of these, Mark. From a trading perspective.
Oh, from a trading perspective, who cares, right?
They're definitely there. Yeah, for sure.
No.
Newmont actually hitting up near new highs, coming up into earnings. Just been an absolute beautiful trade. In fact, that breakout there just a few weeks ago, Noah, was real. And there's still a lot of companies setting up on triggerable and tradable patterns right now in this market. So, yeah, I'm with you guys. I mean, I can't make that case for the broad market. I can't make the case from a long-term investing standpoint. Trades, bullish, sure. I mean, Amazon, Netflix, Slack, Zoom, that pullback was beautiful. There have been a lot of really interesting trades recently. In fact, that deep pullback into the moving average zone that popped up, I mean, you're looking at triggerable and tradable signals. Noah, I asked you this last Friday. I'm going to ask you here as well. Is swing trading back? Are we able to do that now?
I think so. Because volatility's dropped a bit. It's not, you know, you still have some bigger risk if you're using swing trading style stop losses. That's going to, a lot of candidates have such big ATRs. That's going to require you to use a looser stop loss, which means you have to have a more modest position size if you want to trade with confidence without overexposing yourself to risk.
And I'd like to make a special announcement at Tackle Trading. We're going to come up with a new t-shirt line that says, I have a big ATR. And they're going to be available on the Tackle Trading website sometimes.
All right. I'll
is that
buy
a reference to my gut, or is that a reference to something else there, Mark, that I'm not sure about?
I have a big ATR.
Well, you know, I put on the COVID-19 there, Tim. I think I'm up a few pounds since being on lockdown.
Yeah.
Oh, you missed me mocking all of you, you know, like at the start of the show, Noah. So
I wouldn't say I missed it.
You remember that old saying? They marketed it for a bit. It was called "Chicks dig the long ball."
Yeah, no, like, yeah.
I always wanted a T-shirt that said "Chicks dig the long call." You know, let's go for it. I'm sure that we
Hey,
can
listen,
get that.
that's actually really good. I would wear that T-shirt. You know,
yeah.
So in fact, I'm gonna listen. This is how this is capitalism, right? This is why individuals that watch this, we are entrepreneurial in nature. Our community is tackle trading. If you want to be a part of a community, and hey, who doesn't need a community these days? If you want to be part of a community of entrepreneurs, come check us out. 15-day trial. Email me at team@tackle-trading. Go to the website. We have an amazing community of entrepreneurs, and that's what it's all right. You hear an idea, like, you know, I could see a little T-shirt line, right, that you could have some fun sayings with.
Yeah.
You know?
I do still want my Timmy the Bear T-shirt, Gino Gems T-shirt, Cold Blooded Market Assassins. There's a bunch we could do for sure,
Oh, yeah.
Jonathan. Let's talk some company news here, guys. Stuff in that is in the news that grabbed my attention. Disney is furloughing 100,000 people. Mark, goes to show we've talked about this company a lot, obviously, but another sign that they're going to have continued problems. You feel for people out of work. There's no doubt about it. But big firms are coming out and doing this right now.
Well, I think along with the headline, Tim, I saw that they're also maintaining their compensation for executives. So
is that right?
That's right. So furloughing employees, which I mean, it certainly is as understandable when you're in the services industry like that, but also at the same point in time, executives keeping big bonuses.
Oh, I have no idea. Listen, I'll always vote for the bourgeoisie because, you know, self-interest, right? We vote out of self-interest.
Yeah.
If I was a service employee, boy, socialism sounds a lot better to me these days, right? It sounds a lot better. There's a real issue for capitalists such as ourselves, for people that believe in conservative ideology. There is a danger that we lose long-term if the average worker isn't taken care of. Mm-hmm. And so it is in capitalism's best interest in this time period to not stoke the fires of socialism. So
yeah. Do you think a lot of companies, I'm going to ask a rhetorical question, but are just doing this to kick people in the unemployment line, take advantage of the government programs right now? Like,
well, it certainly makes it easier to make that decision, doesn't it? Knowing that they have the big government safety net at the moment.
Like,
I mean, there's, from what I've seen, a lot of the programs and well, yeah, I don't know if we call it stimulus or life support, but that's more than a lot of workers would make going to work. So my concern is that it kills productivity. Like, who wants to go back to work if you can pull in as much money just from government checks?
yeah.
So you're going to have to get more money out of employers to really, get people off that short-term assistance.
Mm-hmm.
What price level would you buy Disney at?
50,
Gotta hold it. What?
$50.
Well, if you like it at 100, you'd love it at 80. And of course, 50, you'd buy as much as you can.
I might buy at 80 on a double dip down there. I don't know. I mean, they have so many risks here, Mark. I mean, when do people go back to the theaters? How much of their revenue and actual profitability?
I heard an extra interesting point. So phase one, you're going to open up the theaters. What movies are they going to watch?
Yeah. When are they going to start production on new movies?
like
when are you going to put a video, crew, actors together to go out and film a new film for 2022?
Listen, if they did the double header of Outbreak and what was the one with Matt Damon and Gwyneth Paltrow recently?
Oh, I know what you're talking about. I haven't seen it, but yeah.
Come on, that would probably get some people in the theaters. Just
Oh, dude, you open up the theater and I can get a rerunning of The Matrix in the theater and get me feeling like 1998 when that movie first came out. I might be tempted, but I ain't going in the short term. There's no way. I mean, social distancing. I don't think theaters are going to come back anytime soon. When is the theme park going to come back?
Well, no, Disney is the ultimate, hey, one day things will be better bet, right? And
yeah,
because it's not better in 2020. 2020 on one level or another is going to be terrible for Disney. Mm-hmm. So really, when you are buying Disney, it is literally one day, because is Disney going out of business? No, of course not. One day things will be better. What price are you going to be willing to pay for that?
Mm-hmm.
Because
take a peek at the 80 strike naked put. How much could we get if we took, an obligation at 80, which is where the low came in, obviously, and that is a one day things will get better. For the May 25-day contract at 80, you can pick up $80. Yeah,
better than a kick in the shins.
Better than a kick in the shins, or somebody stepping on your toes for sure.
I mean, even if you didn't do it on margin, right? What's that? About $1,000 when you times it over 12 periods. More than that, actually. $8,000 capital. I mean, you're getting a annualized rate of return north of 10%. Mm-hmm. Not even considering margin. So if that's not terrible, right?
No.
And so if this is, I guess, the big argument I've been making all along is if you want to be greedy and be like, I'm going to buy now because I can't miss on Disney going out to 130. Hey, God bless. You're not my type of individual. You're not going to listen to me anyways. And I think you're being foolish and reckless. I mean, if you're looking for reasonable returns on something that you're willing to own long-term, I mean, if Disney goes down to 70, you're holding it long-term. Mm-hmm. Those annualized returns are not too shabby. And so it gives you a way to play the market right now from an investing point of view that gives you something to do, gives you reasonable returns with taking less risk than buying it outright. Now, of course, if Disney goes to 125 by summer, you'll be like, oh, I wish I had done that. But I'm okay with that.
Do you put any stock in book value?
Dude, fundamentals don't matter anymore.
Yeah, well, fundamentals don't matter in this market, but the book value is $50. I mean, at least at $50, the real estate holdings, things like that. 80 is an interesting one, or deeper, but this process of identifying where you'd be willing, I think, is a very good process. That being said, I would probably hold off on that one for a bit. Just too much uncertainty around that company, in my person's opinion. But 12% a year, Mark, I mean, that you at least have to consider stuff like that.
That's the thing.
I get it.
If and it's not, because I'm not going to go sell a naked put on Disney right now. I think there's a lot of downside risk in this type of company. But if you're going to do it, that's, I guess, the main point. If you're like, I got to own Disney, that's the route I would take if I just absolutely had to own Disney today. So,
yep. Moving on to the next one, give me Boeing if you can. Couple of stories around Boeing. Number one, they were downgraded at Citigroup, which of course they were. And then GE has a subsidiary of the company that actually was going to buy the 737 Maxes, and GE canceled a huge order on this. Obviously, a couple of real big problems. I mean, companies that have these big projects in the works, Mark, whether it's building airplanes or whatever it might be, in the face of uncertainty, don't you think they're going to back out of a lot of those deals, just like GE did this weekend? And Boeing, obviously one of the biggest producers of planes in the world, their numbers have been terrible for quite some time. So even that whole exercise of where would you buy Boeing, this is a harder one for me because they've got such a necessity and dependency on big projects, not people going back to theaters at some point. What's your read on Boeing here?
Pull up the option chart. Because obviously downside risk, right?
Mm-hmm. Tons of it, yeah.
I mean, what price are you willing to pay for Boeing? Like, because I mean, you can get $20 on a $50 naked put almost. Like,
Yeah.
like you can get something for naked puts way out of there.
Well, it looks like you could also do credit spreads if you don't want the full risk exposure of naked puts.
Mm-hmm.
Cody is thinking about doing he's
looking at
Cody's
it.
like literally doing the
Yes,
math.
like,
Like, I wonder
I
what I
mean-
could build out there.
That I am sorry.
I mean, look at those 65.
I really like that. It's like, yeah, selling 65 or like, no, it's like a
I
credit.
mean, what is that? That's once again, that's just around roughly give or take 10% annualized ROI, not
Mhm.
considering margin, And so like, if you're willing to take ownership of Boeing at 65, man, there are things you can do with your money right now that don't involve the sophomoric approach to, I'm just going to go buy things right now in the fits of all this because I'm going to bet on hardcore monetary theory that it will actually make people buy stuff. That's just ridiculous. You might win, but don't make it smart.
Mhm.
But Cody's thinking about this. He's like,
Sorry.
Yeah, and playing off the volatility is obviously a very smart thing to do. It's something that most traders who sell naked puts have learned that lesson over the years, Mark. When you have increasing volatility in times of uncertainty, deep out of the money naked puts start to become much more attractive. I mean, Boeing here, that is interesting for the 25-day contract, but go back to the trade tab for a minute. How much do we get if we do like a 60-day contract or a 75 at those same levels? Because I'm willing to go out a couple months and sell, Mark. I mean, at the 50 strike here on the June, you can pick up $110, and it is an extra month, but you're getting all that premium now front loaded up now. So there's some interesting concepts here in the options market right now where you can get credits. And Noah, like you said, if it's not an investment thesis where you're willing to take ownership, you might want to consider the bull put spread so that you have that controlled risk. Is that what I
Yeah,
heard?
no, absolutely. I mean, just controlled risk. You don't have to worry about margin increasing on a credit spread, things of that nature. You can still take assignment, and there's ways to manage the risk on the downside. So yeah, if you don't necessarily want to own it, but you want to take advantage of some of those inflated premiums, I think credit spreads are a great way to go.
Anything here pre-earnings, though, you better be willing to take assignment because you can get some gapping risk here on any of these companies.
okay, let's talk about that. What gapping risk is there in earning? Like,
the market is pricing
in a market that assumes earnings are terrible.
Yeah, the market's pricing in a $40 market maker move, it looks like.
Okay, but
So-
okay, let's take this and let's think about this because I want insight from Noah, you, and Gino on this because we were talking about this a little bit on our prep show on Sunday, and it's like I'm the wrong guy for these, but like I got to get some insight and I got to be a student here because it's like, all right, so if I believe that $40, I was like, no, I don't buy it. I mean, people already assume Boeing's earnings report is going to be terrible, right? So like, how do I play this from a volatility earnings play? Because this is not my forte. You guys do a lot more of this. How do I take advantage of, I don't think that level of risk is there on an earnings. And if that's you might disagree with my thesis, but
So
I
let's start with that. What you just did is something that you have to do whenever you're doing volatility trading. You have to start with a thesis. It can be based on historical data, historical gapping. It could be based on your instincts, Mark, as a 15-year veteran trader. But you have to have a thesis on whether or not the gap in volatility projection is going to be inside or outside the MMM.
I think
window.
it's going to be inside. Tell me how to play it, because I have
So
very little practical experience here.
Iron condor would be how you play it. So if you believe it's going to be inside, short strangle in this market, you have margin, changing margin, you have assignment risk. That's not why you're getting into the trade. So what you would do is you would go 45 days out, a couple of days before earnings, and you would build an iron condor at the lowest deltas that give you a credit. Cody, click on the Analyze tab real quick if you can. Now, and in my back testing, my career doing volatility trading, by the way, it is much better to go 45 to 75 days out when you're doing vol crush plays than 7 or 14 or 21. You don't want the short-term gamma risk. And I'm going to go all option
vol
nerd
crush
on you.
plays would be kind of, with my premise, what I'm looking for, right?
If you think it's going to be inside. Now, the purest form of a volatility crush is a short strangle. But I'm assuming most traders are not going to want to take the naked margin risk right now in anything, in terms of this kind of thing. So that's where you go to the condor to try to still have a play that makes sense. Not 39-day on the weekly, Cody.
But now let's say I think that there's
Go.
60 June, the 60 June.
So when would I use a Debicon?
If you believe the premise that Boeing was going to move further than $40.
That's when I use a Debicon.
If you think it's going to be outside the window.
Okay.
Yep. So because your thesis is
what
that
if I
Boeing will
did,
stay
what if I
inside.
think there's upside potential, but no downside? Could I do?
You can do things like a ratioed back spread, but you're always going to have the volatility considerations.
Now, could I pay?
Or even an out of the money butterfly, Mark.
Could I? Okay,
webinar
we're talking out of the money butterfly.
Yep. Yep.
All right. Could I pay with the naked put the credit to get close to paying for the bull call spread of the Debicon?
Maybe, and those ratioed type of ideas are really interesting. This is a Jeff Crystal specialty here, Noah. Take naked put credits and build out of the money speculation plays with the money you got, right?
Oh yeah, that's something I've done a lot of over the years, like selling, a credit spread of some sort as well to pay for a speculative trade, high probability credit spread to pay for something that only would make you money if you got the move.
Mm-hmm.
It's can be very, very effective. It's just sometimes you put those trades on and they don't go anywhere. But
sure,
yeah, you can get creative.
The whole conversation here obviously is more than what we're going to do in the halftime show. Halftime show, we usually break down news and whatnot. And but here's the thing, guys, if you're out there and you're watching our show right now, would you be interested in a webinar, maybe on a Wednesday night, Sunday, where we've been doing those specialty ones where we talk about volatility trading, where we talk specifically about earnings trading, something like that? Is this a topic that you would show up and, participate with? Is it something you'd want to go down those rabbit holes? Because Mark, in a market like this, creativity and skill set and strategy obviously gives you more choices than just whether or not you're long or short, right? Going long or short is a different conversation.
Yeah, because I got this selling naked put thing down. Man, I got a lot of practice at that. I'm looking to build my skill set right now as I look at all these naked puts expire worthless.
Yep. And looks like our hashtag Team Tackle crew says they would be interested in that. I'll put it into the planning phase here, guys, and we'll talk about it as a team tomorrow. This Wednesday, though, by the way, speaking of events, Mark, we're having our regular weekly Wednesday event at 7 o'clock Eastern, and you are going to be teaching. And what is that topic going to be? You're going to be talking about day trading? Naked puts. I'm
going to talk about naked puts. It is going to be a webinar that if you are a new investor, new to the investing world, this is going to be a great for you.
Mm-hmm.
The latter half of it, even if you have experience, we're going to get into more advanced concepts, how we calculate, these percentages, right? Why we use it. The naked put is, I think, the most powerful tool in the arsenal for a long-term investor. Mm-hmm. I do. And it can allow you to do things to make money. You think about it. If I can make 10% on my money, taking lower risk assignment trades, how much upside do you have as somebody that just buys the market right now? You think it has another 10% to run this year?
Maybe.
It better.
Maybe, I mean, but I guess that's the whole point about me pushing back on all these themes. There's so many tactics that make more sense to me than just long equity. Naked puts, spreads, volatility trading. You can just day trade. So many different viable approaches to trading right now that make sense. Picking individual companies like Noah talked about, just hoping the Fed has your back. I'm not there with Jerome Powell. I'm not doing the whole trust fall off of a 10-story building yet here, Noah. Personally, it's just a little bit too much risk.
The Fed does have your back. It's just, will it work this time?
Yeah.
And but I promise you, they want to make the 1% wealthier.
Oh, and they will.
That is their ultimate. They want to make the 1% wealthier. I promise you that.
Yep. Moving through a few more companies here, as always on a Monday. Let's talk a little bit about UAL if we can. One of the first airlines that came in, $2.1 billion loss. Now, Mark, a lot of the flight cancellations didn't even happen till March. I think Q2 earnings are even going to be worse for airlines than Q1, don't you? They projected a $2 billion loss here this morning.
Listen, I don't know. Because what is the government going to do? Keep giving the airline industry tens of billions of dollars indefinitely? I mean, they just can't. They won't. Eventually, they'll cut off the funds, and United will sell planes. They'll lease. I think I already saw a report that they've already started to do that, sell and lease planes off. A bet on the airlines is a bet on COVID.
Yeah,
it really is, and more importantly, a bet on consumer behavior and business behavior. How many people in the next year are just going to work from home? How many of those meetings are going to be canceled and those conferences and just done on Zoom now? I mean, that's just reality to some level, right? But they really, it's hard to see a trajectory where UAL and any of the other airlines just take off and go to the moon again.
It is interesting, though, what industries are getting government assistance and those who are presumed to not, because airlines here, obviously, the big question is how much government money will be there. We know they've already given them some. The retail sector, I got to read a quote I read from Stephen Mnuchin today. He was talking about retailers and how they may not have their back. Mark, in all of this, there might be winners and losers that the Fed, the Treasury, and these different industries decide to stay. Give me RTH if you can. He says, if we prop up those retailers, it would just delay their fate into oblivion. COVID gives the CEOs.
Weren't we talking retail apocalypse long before COVID came along?
I mean, don't you think they're going to have to make some tough choices to let some companies fail? And how do you make that decision? Well,
are you asking philosophically?
Yeah.
Philosophically, actually, bribery might be involved. That might help. I'm not that cynical. Maybe I am.
So if JCPenney comes to the desk and says, "Hey, we want some money," they're filing bankruptcy. Obviously, you're going to have a very tough argument there that the government should come in with public money and help out a bankrupting company.
Well, and I think what Mnuchin is reflecting on is that, do you know how much money it would take to save everybody? States, local governments, retail, oil and gas, airlines, average American. I don't even know. The number is probably staggering, right?
Yeah. It's incomprehensible. There's no way that you can do it forever. That's where this whole Fed has your back thing, maybe for necessary industries and for human beings and all those kind of things, and for the banks on Wall Street. But I do think you're still going to have some real losers out of all this, Mark. We're obviously seeing it in retail. We're going to see it in restaurants as well. They're not going to save every local burger bar. They're not going to save every local chain or whatever it might be. If people don't come back and consumer behavior doesn't come back, these companies are going to have a lot of pressure down the road. Novartis, real quick here, NVS, and they did just get an FDA approval to test out hydroxychloroquine in a trial and whatnot. Stock is behaving pretty good here today. Obviously, some of these companies, Mark, have been at the forefront of hitting the news headlines. Is this, some real good news for the COVID situation? Do we have hopes of this drug, or is just another trial, another headline?
It's good for people that own the stock, so it can get jacked up by momentum traders.
Yeah.
I mean, look at Gilead. I mean, you saw this last week, right? Something came out. Gilead stock went crazy. Gilead even threw cold water on the study saying it's statistically insignificant. It didn't matter. I mean, go put in GILD. Where are we at with that? But yeah, so it's good for the stock. On the COVID situation, no.
Cody's just got gold on his mind. I mean,
I want to do another naked put.
GILD.
Oh, I'm sorry. I heard GLD.
Yeah.
So like, I mean, it can jack up the price of a stock, but like, listen, the COVID thing's a long game. I wish I had better news. It's going to be around for a while. There's very smart people working on it that will get us a vaccine, therapeutic treatments. What those are, man, for every 10 names you hear, they're probably not any of those 10 names, right? So I mean, there's all kinds of things going on. Eventually one will stick. And hey, if a company's charging for it, you want to be in the stock. Everything before then is just nonsensical noise. Eventually one will stick, though. Eventually one will stick.
Yeah. And as we wait for all of those developments, obviously you're going to have continued stuff on coronavirus and how states and local municipalities are responding to it, as well as the federal guidelines for that reopening through phase 1, 2, 3, and 4. New York City canceled their live events through June, so concerts in the park, things like that, not going to happen. This reopening of the economy might be a lot longer than I think people realize, quite frankly. It's going to take some time, but then some people, Mark, are just going to go out and do whatever they want to do as well. You've got interesting things developing. I did see Facebook released an app called a symptom tracker. Cody, did you take a look at that?
Yeah, I did. Kind of looks like the John Hopkins one because with the confirmed cases, but I need to dig more into it. If it's, I wonder if it's connected to like the whole apps that like alert you when someone's near you or something like that. Because other than that, it's just another form of tracking the virus.
Yeah. And I don't know how to think about the data I saw there, and I don't really care to look at the chart until it has more data come through it. But I'm reading that factories are considering, and they need to, Mark, protocols where they like test your temperature before you come to work. Doesn't the world just have to look different, at least for quite some time, until we have a better medical response?
Yeah, of course it is. I mean, come on. Like, listen, and you see it right now. Russia having a huge outbreak. Japan, yesterday, hospitals in Tokyo turning people away because they were capacity. And we are going to go through these type of cycles. Listen, we're all going to reopen. Now, you can disagree with that. You can, all that. Parts of this country are going to reopen, whether it is a good idea or not. And other parts are going to fight it. And it's really going to be a diverse, it's going to look weird in America because some economies are going to be fully functioning and others are going to be shut down, on this really large scale. What is the right answer? I don't know, but I do know with a certainty that this virus is highly transmittable. It's going to be around. It is going to be a weight on the market. It's going to be a weight on consumer behavior. It's going to be a weight on business behavior. That's a given.
Yeah.
And I think those are some of the better bearish arguments that as a bull get me to be a little cautious, because what the end totality of how this plays out, I mean, we could all play a guessing game, right? But it is going to look different for a long while. You're just not going to have like crowded bars. In some places you will, right? Because they'll say, screw it, we're doing with it.
One of those places might be Las Vegas, Nevada. Quick peek at Wynn Casino here, Cody. Just finishing your thought there, Mark, for you. But the reality is you're going to see things like the Vegas Strip. They're going to have to reopen at some point. They're just going to cite economics and revenue. I saw the CEO of Wynn basically come out and say, hey, listen, we want to reopen the Strip.
Las Vegas isn't going to be the epicenter, but it is going to be the Wuhan that spreads it to everywhere else in America.
People come to Vegas and don't
come to
care.
Vegas. Hey, what stays in Vegas unless it's COVID-19. And it's coming back to your hometown.
Oh, it's going to be interesting to watch this thing wave through here, Noah. I know that we've seen protests around the country, a lot of people screaming, let's get back to business right away. You're seeing some of this. At some point, Cody, we're going to start this phase process, phase 1, phase 2, phase 3. People need to try to do the best they can to understand you still got to practice safety. You still got to practice cleanliness, hygiene, wash your hands a lot, be aware of what you're doing.
Have you seen, come on, let's be real. Did you see the beaches in Florida? Did you see the protesters? We're Americans. we're not going to practice social distancing and safety. I mean, let's just call it what it is. Like,
I'm hopeful. I'm
oh,
hopeful.
that's so cute.
That's nice. Earnings this week, guys. Noah, tell me which company you're most interested. This week's earnings. You got Netflix, you got Coca-Cola, IBM, Delta Airlines, Domino's Pizza, Intel. Anybody
Well, I'm
grabbing your
really
attention?
curious about the airlines, just curiosity out of the airlines, because I mean, record low in oil. I mean, not record low, but significantly cheap oil. But then you've got this huge drop off in travel. I know they burn through cash like there's no tomorrow. I think that this has big potential for movement.
You know
And
what Noah just told me about him? He loves watching houses burn down and car wrecks. Like he
well, you
likes,
know,
he just likes to be the spectator. He's like, wow, wonder how many
I'm
people died in that.
I will admit to turning my head and trying to see what happens to that accident when you're driving by on the freeway. That may or may not be true for my my own human nature. Maybe.
We all do that for sure. You take a peek, don't you? You got to see what's going on there. There's no
Yeah.
doubt about it. I'm kind of interested in many of these companies. Coca-Cola is one of them, Noah. I'm very fascinated with, because I want to know what the impact is to some of their supply chains, Mark, like you've talked about. If they have any commentary on how, restaurant revenues have affected them, things like that. And the dollar headwinds, dollar up at 100 again. So Coke is one of those just big players that whenever they have earnings, I'm going to read the report. There's no question about it. Obviously Netflix as well. Are they going to try to tap the brakes on this rally? Sometimes CEO will come out and say, hey, listen, guys, I mean, we've had great stock performance. This
All right. Would you be shocked if you saw Netflix at 600 this year?
Nope. I wouldn't. Because it's like the Tesla thing, right? So when these parabolic runs get going, no upward price mobility and just these blast out trends, it wouldn't surprise me, Mark. But that being said, are you going to buy it right in front of earnings when it's just ran 40% this year in a market?
I'm not buying Netflix ever.
Right.
But trading, I mean,
what's the MMM on this one? Let's do this, Cody. Tomorrow, let's prep volatility trade on Netflix. It's tomorrow after the bell.
Like it.
Yep. Because our market maker moved 49. Aye. About 11-12% gap projection here, Mark, on a stock that's been absolutely gangbusters. I think we could do something with an inverted fly on that, I'm guessing.
I shared my thoughts with the pro members yesterday on Netflix, but it's all about subscriber numbers. Those subscriber numbers are going to be pretty good.
Yep. Noah, you did a stock report over the weekend. As we kind of wrap up our show here, last thoughts. Number one, explain people how they get those reports, what the pro membership is, pitch our product if you can.
Yeah, well, pro membership includes lots of benefits like weekly scouting reports. You've got your stock report, you got your options report, we got both futures and a Forex report as well, and then a weekly newsletter that gives you an overall market breakdown. And that's something that all pro members gain access to. You can, again, we've got a 15-day free trial for everybody. And of course, our pro members already know the value of those reports. I get awesome feedback every time we publish one of those. And there's just some awesome picks on there. I really enjoyed going through Tyler's options report. I put a lot of time and effort into the stock report. Plus, we've got things like the Traders Lounge that take those, where we take the picks and things that we're talking about in those scouting reports. We're doing practical application on them on a daily basis in those Traders Lounge, talking about what our members are doing. And then we have our coaches shows and a lot of other great benefits. So it's definitely worth checking out. I mean, cheap is free as far as checking out the value we have, because you can get in there and for 15 days. And if you're new, we've got great foundational courses like Tech 101 and Options 101. So you can learn about some of the things we're doing here with, analyzing the charts, understanding risk reward, understanding trends and cycles of price, as well as getting to know the options, rudiments of options. You got to know those options if you want to be able to do a volatility play, if you want to be able to speculate with a butterfly, those types of things. So the more you learn, the better you'll be able to take advantage of market movement and volatility. And it's a tremendous value. Plus, our community is awesome. Just such an awesome group of like-minded individuals. It's a lot of fun to just hang out with these people.
Listen, and we do a lot of things and we provide value, but the number one thing is our community is awesome. Like entrepreneur, financial freedom, motivated. It will keep your spirits up and keep you driven. It is so hard in life to stay motivated consistently. Our community feeds upon itself. And aside from that, it's just awesome people. I just had Marie just sent me a thing and said, my daughter-in-law, we're going to get you out a hoodie. I'm going to get ladies like a big ATR or something ridiculous. And I'm going to get me a hoodie made. We have a member of our community, I don't know if you see this, Noah and Tim, sent us disposable face masks for us to wear in this. And you're going to have to come over to my house if you want to pick up you guys's, because I ain't traveling over to your COVID-19 diseased neighborhoods. So
did the shipments come to your house, Mark?
Yeah, no, I got 100 masks for you each. Come on over.
Yeah.
Pick them up. I'll leave them on the doorstep, and I'll draw a little line on how close you can approach my house. No, awesome community though. Seriously, if you need motivation in life, this is the group of people. And I'm not talking about Noah, Tim, and myself and Cody. I'm talking about the members themselves. You are not going to find a finer group of individuals to help you stay on track to achieve your financial goals. Come join out and see if it's for you. 15-day free trial. Email me at team at Tackle Trading. Be happy to help. Or go to the store page on tackletrading.com.
By the way, the market's rolling over just a hair here on the intraday. Little double top pattern on that 5-minute chart, Cody. Kind of interesting.
Timmy the Bear never wants to close the show when the market might be dropped. He's like, this is I live for.
Well, look at that consolidation. Now you're breaking down on multiple time frames. There's just no weakness in the market right now.
Bulls are in control.
Bulls have been in charge.
At some point, I believe there's a real risk that algos flip over. It's probably optimistically like 7-10 days away. That's a really hard prediction to make, but like the Bulls are in control right now. It's going to take something to slap them down to make them lose faith.
Yeah. Bank earnings didn't do it last week. We'll see if some of these other earnings across
Market
various
don't
areas.
care about your stinking earnings.
Market hasn't. All right, guys, great show
I
today
want to know.
here.
Okay, so if movie theaters opened up, one last thing before we go. Movie theaters opened up, and they could play one old movie on the screen. What is the movie that would get you to go?
I'm going to go with The Matrix, but it has to be like all three of them back to back.
Well, I already called out. I don't know if you're here when I said that. Matrix 1998 was my favorite, maybe my favorite movie I ever saw in the theater in that regard, because it was so unique. I had no idea what I was expecting. It blew my mind when it came out. All three Matrixes back to back would turn into a weird techno dance party with some of those second and third movie scenes that they had. No thanks. Man, I'm a huge Tarantino fan. I mean, if they played something like really old school, like Bridge Over the River Kwai, or like Tora Tora Tora, or some of those old black and white movies, or even a John Wayne movie, I might go to that. I definitely would go see Pulp Fiction in theater if it was there. I am a huge Tarantino fan. I just watched, Inglourious Bastards just the other day on Netflix.
Oh, same here. I watched it yesterday.
Yeah. So I would go see something like that, Mark. Give
What
me
about you, Cody?
Yeah.
I don't know. I'm a big Lord of the Rings fan. I'd love to see those back to back. Again,
if I've been growing out my Hobbit hair, I could just take my hat off, and that'll be like an episode of Lord of the Rings. So,
if I'm taking my kids, I'd go take them to Wizard of Oz in the theater. I think that'd be cool. They need to see that. What about you, Mark?
Explain to them the context behind Wizard of Oz.
Isn't that a cool backstory, Cody? The ideas behind it, yeah.
We still need to do a podcast on that. On the back,
I agree.
The context of Wizard of Oz.
Oh, I better be there because I'm all about that. Plus, I represent the Lollipop Guild, so we'll be there for sure.
Gremlins in the theater, Casablanca, Death Proof, Jurassic Park, Top Gun. That was a fun
Gladiator's
one.
A good one. That's a fun
Avatar.
big screen.
They got new avatars coming out, I think, at some point. Casablanca, Scarface, for sure. A lot of really good ones.
No, for me, it would be either Grease or Moulin Rouge. Like,
Grease.
if
Mark likes himself a musical.
I do like myself a musical, and if I'm going to die in a theater with all your nasty COVID-19 around me, I'm going to be singing to the top of my lungs while I go down with the ship. So,
what do you think of that?
You should throw Greatest Showman in that.
Yeah, I was going to say.
I liked it. I mean, it wasn't the same. I don't know. Moulin Rouge in Greece,
What about some Sound of Music?
dude, listen, if you say a damn bad word about the Sound of Music, Cody, I'm
Hey,
gonna
listen.
fly down. I
Oh,
will
I
get on
love
a plane
Sound of Music.
and I will COVID-19, I will Rona your ass in Hawaii.
All right. Well, guys, let's wrap. We're done. We'll be back tomorrow, 12:30 Eastern Standard Time. And let me think about those, what it means to Rona somebody's ass, Mark. I'm not sure exactly what that is. You're going to go and like wipe your hands on his face or something? Like, what does that look like? I'm not sure. We'll be back tomorrow, guys. Like, share, come back and join us each and every day when we go live.